Hello, this is John Burford, and this is another very brief video of an example of how I use my tramline trading methods in real time. This is a live chart of soybeans. Now, soybeans is not a market that's traded very heavily in the UK, but sometimes you get some pretty good moves, and it's certainly worth taking a look at occasionally. So let's take a look. We'll start from back here. The high was off the scale back here, off the chart here, back here. That'll be wave 1, that's wave 2. That is, of course, wave 3 because it's long and strong. That gives the game away. This rally here is wave 4, and then once wave 4 is in, you would expect the market to move to a new low in wave 5, and that's precisely what it did here. So I now have my first 5 down, and from 5 down we normally get a 3 up. But here, if you notice the momentum, here there's a big momentum divergence at this low here. Now that's a giveaway that we should expect a fairly decent rally off of the low, and that's precisely what we've had. We've had. It's rallied up to here, back down to there, up to there, down to there, and then that's another touch point. So I've got on this level here, I've got this touch point here, that touch point there, and that one there. That gives me 3. That's enough touch points to place a reliable, possibly a tram line. There's certainly a trend line. So when that is in place, all I have to do is draw a parallel line and put it up onto this high here and see what happens. Well, in the last few days the market tried to reach this line, didn't quite. It's moving back down. So it can either move back down now. Let's move that back up. Move it down here because the ABC has finished. Remember, this is 5 down to this point here. Then we expect an ABC, and that would do it. Or if it has some more legs on it, it could rally back up to here and hit the 950 level, which is exactly the meeting of this penciled in tramline with the Fibonacci 50%. So that's if it makes it up to here, that would be very solid resistance, and I would expect it to move back down again from there. So I've got two options. Either the market will move down from here, or it'll just one more push up and it'll move down from there. So there I have a basis for trades. I could either elect to short it here and put a fairly close stop, or I could wait for the market to possibly rally up to here, enter a limit order to sell, and put a stop up here, say, and wait for it to resume its downtrend. And here's another example in sugar, very briefly. We've had a 5-wave move down. That's 1, 2, 3, 4, 5. There's a momentum divergence occurring at that 5. And we expect, of course, a significant rally with a momentum divergence and a complete 5 down. In fact, we're looking for an ABC, and that's exactly what we got. We had a rally in wave A, we have a dip in wave B. Notice wave B is in a ABC formation, which is entirely correct. And wave C is the big rally up to here, which is the Fibonacci 76% level, pretty much on the dot. That's a very pretty confirmation. So from that point there, if that is our wave C complete, then we should expect a resumption of the downtrend, and that is exactly what we're getting. And in fact, as I speak, the market is making a new low off of this high, and I expect that to continue. So let's recap. I have I have a wave 1, a wave 2, wave 3, wave 4, wave 5. That's a finished 5 down. I've got an A, B, C relief rally, and then a new downtrend.